Hello, and welcome to the March Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. Once again, I'm happy to say we we had a very good month in the financial markets. U.S. markets were up about 3% plus or minus. Developed markets around the world were up about 3% plus or minus. Fixed income made money as interest rates more or less stayed steady or dropped a little bit. The only asset class that really went down at all was emerging markets on some continued turbulence, but even that was only down a little bit, less than 1%. So overall, we had another good month to start the year. This comes as another relief, especially after the terrible markets at the end of last year. And in fact, when we look at this bounce, we're seeing it for, I think, the main reason of confidence. When you look at all of the worries that we had that have actually started to go away, it's not surprising we're seeing a bounce. When you look at the government shutdown, that rattled markets, that stopped economic data, it caused a big problem, but now it's over. And even better, it seems like the two sides have agreed that shutdowns are counterproductive, and we won't see another one. When you look at the China trade negotiations, we're actually seeing some progress, and there's signs that we might see a deal this month. And that would be great because that would eliminate a major source of uncertainty. And then when we look at the other thing that's out there, Brexit, the British exit from the European Union, we see progress, we see some signs that they may actually postpone it or even not even do it. And again, that would remove a substantial source of uncertainty. Markets hate uncertainty. And when you see all of those worries start to recede, that's when you see markets rally, and that's exactly what we've seen. Now, that's not to say we have nothing to worry about, because in fact, even though we've had the rally, we've seen some of the economic news continue to soften. Housing continues to be soft. Business investment is soft. Industrial production was weak. And one of the worst things, retail spending actually came in with a terrible report. And that's a concern because consumer spending is something that drives the majority of the economy. But at the same time, when you look at that data, you have to remember a couple of things. First of all, it's dated. That data is older because of the government shutdown. Second of all, it may not be as reliable for the same reason. And when you look at all that, you say, okay, maybe this isn't as reliable, and in fact, maybe things have improved now that the shutdown is over and some of the worries have receded. And in fact, that's exactly what we see. We saw consumer confidence stumble, but then rally strongly at the end of last month. So there are signs that yes, people were worried, but now they're feeling better. We've seen the same thing for business confidence. We've seen job growth continue strongly. In other words, the fundamentals remain solid and confidence is bouncing back. Does that mean we don't have risks? Of course not. Corporate earnings are a concern. They've been revised downward, but even there, that's more an effect of confidence. And we can reasonably expect to see those estimates bounce back up. So as we move forward, we had another good month. I think we certainly face risks, but there's a good chance we can move forward and be more positive even as we go. We will see. In any event, I will talk to you next month. Thanks for watching.